What's up everyone, it's Caddy with MoneyVest. So in this video, we are going to be talking about one stock which I believe has the potential to be, of course, the next $1 trillion company. This is within the top 10 of the largest publicly traded stocks over in the US. This is a very, very high quality business that we have discussed on the channel before. In fact, we even took a swing trade on this stock, which had been very, very successful in the past. So hope you all enjoyed this video and a complete breakdown on this stock here. We're going to be using our very own MoneyVest platform to analyze this entire company. Make sure that you drop a like and of course subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you want to be a part of our MoneyVest community, and of course the early access to the beta launch that we have coming up as well in less than 4 days. So there is a 51% discount right now if you wanted to take advantage of that. Link's going to be down below. Would love to have you on board. You can access over 17,500 individual stocks, over 100 plus financial metrics, MoneyVest metrics, and of course use our platform to visualize a lot of the fundamental data going back as far as 20 years for every company, if the data is available, of course, and you'll have access to our Discord and our private members only videos as well. So links going to be down below. Love to have you on board. So let's just dive right in. And that company is going to be none other than Eli Lilly. This is one of the, if not the biggest pharmaceutical company that focuses very much on immunology. We got neuroscience, and of course the primary market is going to be diabetes and obesity, with over $811 billion of market cap, M-score sitting at well over 3 out of 5 for the business. If you scroll down a little bit, you'll notice a revenue growth over the last 3 years over 11.6%, 5 year just over 9.6%, and yes, the 10-year is quite low at under 4% for the company, with earnings per share growing at over 13.2% compounded annually over the last 5 years and almost 3% over the last 10 years, and definitely declining in a 3-year period. When it comes to valuation, definitely very, very, very high in terms of valuation. That's one of the reasons why it's trading at an all-time high with a price at over $811 billion. So 132 times earnings multiple on a trailing basis, 22 times sales on a trailing basis, price for free cash flow negative, assuming the free cash flow is negative, and 220 times operating cash flow for the company as well. So we definitely have a company on our hands that has incredible amounts of valuation here, trading at very, very rich numbers. Now, if you plot for some of these things, so revenue has gone from about just under 20 billion to well over $34 billion for the company. So it's growing at a little bit slower rate at over 7%. Gross profit also growing at a slower rate at over 8.2%. Operating income and net income also growing, but at a slower rate here. We're looking at about 9.72%. Operating income definitely growing at a much faster rate at over 15% for the company as well. Last year's free cash flow being negative over $3.1 billion, and earnings per share on a 7-year basis is good. We're looking at 12.27% growth over the last 7 years, and that again, earnings per share going to $5.80 from being negative in 2017, and 2018 was about $3.12. So nonetheless, this has been a very nice, decently growing company. I'll take a look at that over the last 20 years of financials, and again, quarter over quarter as well. Gross margins almost at 80%, so a huge expansion there. Operating margins also to almost 30%. Net margins are coming down slightly, so they've come down to 15%. On average, 19% over the 7-year period. So you can see that net margins have come down from 37% back in 2019 down to a low of about 15%. Operating margins have been relatively stable, and gross margins have also been relatively stable for the business as well. If you come down, plot for some of the other things such as efficiency, return on assets, we're looking at over 8%, slightly lower than its average of 7 years of over 10.5. Return on equity, 46%, significantly lower of almost 90%. However, of course, 2019 number was the outlier here, over 319%. Return on invested capital, we're looking at 25%. Return on capital employed at over 20%. So all these numbers are actually quite good for the business, and stock-based compensation as a percentage of revenue, operating cash flow, and free cash flow is also pretty low in the 4 to 5% range, which is also something that we look for very much. In terms of share buyback, 2.29% shares outstanding going down. So you can see that since 2017, their shares have gone from 1 billion down to 903 million for the company as well. Now, coming over to the financial table, we've got cash that has gone down by 8% and debt is increasing, and as a result the net debt since it was negative back in 2017, has now turned to a positive level of over $19 billion. So that definitely is something to keep in mind. The company's definitely got more debt than cash on the balance sheet. Current ratio is good. Quick ratio is somewhat stable. On average, about 0.99, of course, on a 2023 basis, 0.73. Debt to free cash flow is negative because of the negative free cash flow. Total assets exceed total liabilities. Total assets also do exceed total debt for the company as well. And finally, coming over to valuation, very, very expensive numbers is what we are seeing for the business. You can also take a look at this on the ratio tab. So if you come over to ratio and take a look on the trailing and on a forward basis, forward, we're looking at 65 times earnings for the company, and price to sales, as we already discussed, trailing 22, forward at over 18.6. So definitely a bit more on the expensive side for the company. So going back as far as 20 years worth of data, so this right here is the overall revenue. You can plot for gross profit, you can plot for operating income, net income as well as EBITDA. You can do as much as you want. You can see the last 6-7 years. If you come over to 10 years worth of data, it's been very nice consistent growth for the company. If you remove for revenue, nice growth in gross profit. If you remove for gross profit, nice stable increase in EBITDA as well. And if you remove for EBITDA, take a look at the net income. Although that has been a little bit more stable, more sideways, but it has been, again, in the $6, $7, $8 billion range for the company. And operating income also very nice consistent growth for the company as well. If you come over to cash flows all the way at the bottom, so this right here is going to be free cash flows, negative in 2023. Prior to that, very nice $4 to $5 billion for the company. And if you can also plot for quarterly data, and let's just go over to the last, let's say 16 quarters. The last couple quarters here, we're seeing pretty significant negative free cash flow for the business. And let's see if you plot for revenue, we plot for gross profit, operating income, and net income as well. We're getting, again, very stable numbers with net income as of the most recent quarter coming in at $2.2 billion, which also did exceed expectations from analysts as well. Now, coming over to analyst estimates, speaking of, we got a strong buy rating, 24 ratings with 17 buy ratings, 7 hold with a high price target of over $1,000 and 93 cents, average of $8.96, and low target of $606. And this right here is the compounded annual growth rate expected from Eli Lilly, which is absolutely crazy. We're looking at 2031 earnings per share to go from $5.80 to over $52 a share. That's over almost a 10x growth expected in the next 7 to 8 years. So that's a compounded annual growth rate of 31.5%, so 34.5% on a 7-year basis. And revenue expected to go from about $34 billion to well over $103 billion for the company. That's going to be a 16 to as much as 15% CAGR of 7 to 8 years out for the business as well. So if we are being somewhat conservative, if you go with a 30% growth rate for the company, right now it obviously trades at a 64 times forward earnings multiple. So if I plot for, let's say, a 30% growth rate over here over a 7-year period, so 7-year, we plot for 30% growth rate, we apply a multiple of, let's say, 35, or let's just do 40 right now, because it's right now trading at 64 on a forward basis. Share dilution of 2.29% share buyback, 12% discount rate, 10% margin of safety. Again, this is going to be a little bit more on the optimistic side. If we hit calculate, we're looking at a fair value of $662 a share, which only requires about 26% potential downside for Eli Lilly. So this right here is going to be the entire breakdown for Eli Lilly. As you can see, the price to earnings multiple at the top, the growth rates on the y-axis, and $662 being the intrinsic value or the fair value for this stock, with, of course, depending on your analysis, depending on your conservative estimates, based on different growth rates and different P multiples, where that fair value might be. Now, considering that Eli Lilly right now trades at a price of $898, so we're looking at the stock price somewhere around over here. Let's just come over to this side. So we're looking at, let's say, $901. So the market right now, of course, pricing in for a 34% growth rate as we looked at the fundamental analysis. So analyst estimates, 34% growth rate with a P multiple of over 44 on a long-term basis, which again is very, very high for this pharmaceutical business. For me personally, I would be, of course, a lot lower. So I'd be going closer to 25% growth rate and a 30 times P multiple, which obviously is going to bring the fair value even lower, down sub $400, which of course I know a lot of people would disagree with, but that's more about the conservative, disciplined investing, being more on the objective side, is that long-term growth rates are going to come down. Multiples are also going to normalize at lower and lower levels. So that's why we've got this calculator. That's why we've built this model where you can plug in your own values. You can figure that out for yourself and you know, kind of see, you know, what's going to be the appropriate valuation, what's going to be the appropriate fair value, the price target. So based on those expectations that I plugged in for 7 years, if I'm going with a 25% growth rate and a 30 times P multiple, the price target, of course, is going to be a lot lower. We're looking at $927 for Eli Lilly, which is not a lot of upside over 7 years from these current levels. So let me know your thoughts down in the comment section below. I do believe that Eli Lilly has the potential to get up to that $1 trillion mark over the next, let's say, 5 to 7 years. Certainly that only requires the company to go up by 20%. But of course, is it going to offer a lot of upside compared to what's already out there in terms of other market opportunities? It really goes to show, really is a question about valuation. And again, where are you comfortable buying this stock? So this right here is the entire uptrend since 2019. The stock price is up over 844% in just 5 years. So absolutely massive, massive run up for this company, although it has seen a very nice pullback every now and then. And those have represented very good buying opportunities for us. This right here was the entire trade idea of almost 20%. And of course, since then, the price is up another 138%, very, very nicely. So since 2023, May of last year, so just in about a year, the stock price has gone up 181%. Close to 194% to be precise. So very, very strong move to the upside. So let me know your thoughts down in the comment section below. Technical analysis wise, at the moment, the price definitely seems a bit more overbought. As you can see, the RSI, the MACD, the L3 banker oscillator. So I wouldn't be surprised to see a bit of a pullback or a correction in the stock price, with the support level staying put at $721. Very, very nice support here and that area of demand. And another support kind of aligned with this previous resistance, sitting roughly at $793, $794 for Eli Lilly. So let me know your thoughts down in the comment section below. As always, if you enjoyed this video, found it helpful, make sure you drop a like and don't forget to subscribe to the channel. Again, if you want to get access to this entire platform and again, do your own fundamental analysis on individual stocks, look at a lot of other companies, you know, do a full comprehensive in-depth fundamental valuations, looking at intrinsic values, calculating for price targets. Link's going to be down below. We'd love to have you on board, and a 51% discount limited for some time. And also don't forget, today is 4th of July, so we're giving up 60% off on all educational courses. Coupon code is going to be July 4, only valid for 1 day. So always, happy investing. I'll see you all in the next video.